All righty, so welcome guys. Thank you so much for taking time out of your day to be with us here today. Oh, I hear that there's some feedback, so I'm just gonna mute everyone for right now. And if you have any questions, you can always feel free to do the raise hand icon, or you can put something in the chat, or you can unmute yourself. However is easiest for you. I will be monitoring the chat, so you guys can always utilize that to be able to ask a question, and we will stop so that we can make sure to answer all of your questions. Again, thank you guys for joining us here today. And my name is Lucie McGuire with Arrow Title Services, if I don't already know you. I am the business development officer there. I have done quite a bit when it comes to social media marketing for Arrow and helping clients to get there. We have a weekly market update Monday that we do with local realtors, where we talk about the market and everything that's going on with it. And you guys are always welcome as realtors to come on and join us on that. We love to hear the local expertise and just share it with the public. And it's a great way to get your face and brand and name out there. So you guys are always welcome to join us for that, as well as we do a Thursday's Top Tips in Real Estate, and that is for local realtors and lenders. And we talk about, how the buying side of things are. Mondays is really for like the selling aspect, where you get to showcase a listing that you have and such like that. And then Thursdays is for the buying side. So if you guys haven't already checked that out, feel free to. We have all of the replays on our YouTube channel, Arrow Title Services, and as well as a lot of educational videos. We have our classes that we've done on there, the classes that I've done for social media, etc. So it's just been a very valuable tool to have that YouTube channel, and we hope that you guys find value in it as well. I'm excited to talk about today's topic. Today we have Kathy Braid, who is with Old Republic Title, and we are going to be talking about what you need to know and understanding FIRPTA. It is quite a heavy topic that has a lot of information within it. So we're really excited to be able to bring this to you today with our underwriter, which is Old Republic, and they are an amazing underwriter. We're very happy with them and always thankful for all of the information that Kathy brings to us in these classes. And we're glad that you guys are able to be here to expand your knowledge in how it is applicable to the real estate transaction and how we can help you. So without further ado, I will lead it on to Kathy, as well as don't forget, guys, if you do have any questions, we're here to help you guys. So always feel free to utilize that chat if there's anyone who's popped in just after I've introduced myself and Kathy, and we'll get this show on the road. So thank you so much, Kathy, again, for being here today. And obviously this is also hosted by Martin County Realtors of the Treasure Coast. They have given us this platform to be able to utilize this class for you guys. So we're always thankful for our partnership with them and them allowing us to host this class for you guys. So go ahead and take it away, Kathy. Thank you so much.
Okay, thanks, Lucie. All right, everyone, thanks for joining us this morning. We're going to talk about FIRPTA and why it's important for you to determine that early in the process. So again, without further ado, we're going to start. So we all know what FIRPTA is. FIRPTA stands for the Foreign Investment in Real Property Tax, which was enacted in 1980. FIRPTA ensures that when a foreign seller sells U.S. real property, monies are withheld at closing and sent to the IRS. It's not, they may not have to pay the entire amount that's due. So I like to call it a tax deposit. So that money will go to the IRS and will be on hold until they file taxes, until they file a tax return. So if they're closing now, they won't file a tax return for 2021 until next year. So that money will be there for quite a long time. So it's always best to advise them in the beginning when you first meet with a seller to determine if it is a FIRPTA transaction. So let's talk about some definitions. The amount realized is the sale price, not the proceeds. So the amount that's collected and sent to the IRS is based on that gross sales price. So if it's $500,000, 15%, the potential for 15% will be sent to the IRS. An ITIN is an individual tax identification number. And that's used for tax processing purposes for people who are not eligible for a social security number. It looks and acts and walks and talks just like our social security number. It's 3 digits, dash 2 digits, dash 4 digits. So the reason why it has to be the same is because our system is set up to process our tax returns and everything in that format. So I do have a little tips to help you figure out if the person says they have a social security number to determine whether it's actually an individual tax identification number. A resident alien is a person who holds a resident alien card or a green card, and they will have a social security number. So when you're at your listing appointment, if they say they have that resident alien card, they do have a social security number, and you can proceed as if they are a US citizen. A substantial presence test is something that an accountant can determine for a foreign person if they're in the United States a certain number of days over the past 3 years. The potential for them to not have to collect, for the buyer not have to be responsible for sending into the IRS is there. So that foreign seller would go to an accountant or a tax professional to determine if they qualify for that. A non-resident alien or a foreign national is an individual who is a citizen of any country other than the United States. So that term is used interchangeably, non-resident alien or foreign national. It's a person who is not a citizen of the United States and does not have a green card or resident alien card. A transferee is the buyer in the transaction, and the transferor is the seller in the transaction. So an ITIN, an example of an ITIN is on the screen there, and I will send this presentation to Lucie and she'll be able to share it with you. Most ITINs, and this was taken from the IRS website, ITINs begin with the number 9. And the middle digits were 70 through 82. Any middle digits 70 through 82 are expired. So if the seller does have that ITIN and it has those numbers, they would have to apply for another one. So that's why it's important that they seek the advice of a tax professional early in the transaction. I'm going to say that on almost every slide we go through because it's very, very important. And I want to stress how important it is for them to seek the advice of a tax professional the day after the listing appointment, so that any documentation that needs to be done, anything that's required from the IRS or that the accountant can figure out, needs to be done in a timely manner. ITINs, expired ITINs, or those about to expire must be renewed in order for the seller to expedite the process in their tax return. So of their tax return. So again, if they go to an accountant, the accountant will be able to advise them and say, hey, your tax number is expired, so we have to apply for a new one of those as well. ITINs have to be renewed every 5 years. If you need further information, you can always go to irs.gov, put in ITIN, and you can read about it. Again, it's not good to give them too much advice because unless you're an accountant or you refer them to an accountant, it's really not good because they may take your advice and then it may be incorrect. So that's why the title agent will, give them some information, but will always refer them to a tax professional. Suggest, again, it's right here, suggest they seek the advice of a tax professional at your listing appointment and ask them to do it as quickly as possible. Lucie, do you have someone that you usually refer them to for FIRPTA transactions?
Yes, so I don't know, it's a client or a connection that Michelle has. It's our accountant. So she has an open line of communication with them whenever we have a FIRPTA deal that comes through, or we have a client who calls us about FIRPTA, then we revert all of those detailed questions to the account that accountant. So they will help assist in any which way if you guys don't already have one at your disposal.
Okay. A foreign person, as far as the IRS is concerned, it's a non-resident alien individual. It's a foreign corporation that has not made an election under the Internal Revenue Code to be treated as a domestic corporation, a foreign partnership, a foreign trust, or a foreign estate. Ask the seller to seek the advice of a tax professional. Now, This gets a little confusing here because people will put a property in an LLC thinking that maybe they're a foreign person. They put the property in an LLC, maybe to think they can avoid FIRPTA withholding. However, if it is owned, the LLC is owned by a single person who is a foreign person, FIRPTA still does apply. So that's why they need to speak with an accountant before they do anything. So again, partnerships, corporations, those types of things are a little bit more complicated. If they do not have their EIN number, if they're not treated as a domestic corporation, then the potential is there for the taxes to be withheld, may be higher than the 15%. So again, even though they say these things, they may still have to seek the advice of a tax professional, just to make sure everything is done correct, because the IRS considers the buyer the withholding agent. So we always think that the title agent is the withholding agent because they're the ones who have the money. They're the ones who disperse the money. They get the money from the buyer, disperse it to the seller. So generally, the person who pays an amount to the foreign person is subject to the withholding and must do that FIRPTA withholding. So the buyer is paying the money to the seller, right? So the IRS says, well, it's the buyer's responsibility to make sure that money is collected and sent in. Now, title agents, most title agents, I know I've done this on the West Coast and some of them just don't do it. They give the check made payable to the IRS to the buyer and tell them it's their responsibility to send it. So again, it just depends, but the buyer is responsible. So if the money is not collected and sent into the IRS ever, the IRS can put a lien on that property for the amount of withholding that was due. And we do get claims for that because either the settlement agent didn't ask if the seller was a foreign person, the buyer was never notified if the seller was a foreign person, and the general public does not understand what FIRPTA is, nor do they know about it. I wouldn't know about it if this wasn't my job, because nobody talks about it. Nobody talks about the withholding. Nobody talks about a potential for a lien to be placed on a property that they're purchasing if the money isn't collected from the seller. So it is not a lien that would be covered under the title insurance policy because it happened after the closing date. The lien was placed on the property after the closing date. Title insurance protects the buyer from the closing date backwards. Any liens, judgments, those types of things that affect title that happened prior to the closing. This happened after the closing. So, you know, it causes a real big problem, right? So again, on your listing appointment, you're going to be asking certain questions.
Kathy.
As I said, a withholding agent is personally liable for full amount of FIRPTA withholding tax required plus any penalties and interest. That money has to be sent to the buyer within, to the IRS within 20 days of the closing. So what most title agents do is collect the money and send it in as if they would send in a payoff. This way, the buyer, the money is there. The buyer doesn't have to worry about it. The title agent doesn't have to worry about it, but the seller has to be concerned about it because when do they get their money back? How do they know how much it's going to pay? They know that because they've seen a tax account, a professional before the closing, and they filled out certain paperwork that shows that maybe they don't have to pay anything, or maybe they have to pay a reduced amount.
Kathy.
Yes.
We have a question.
Okay.
Saying how forward can you be about asking if a seller is a U.S. citizen?
Okay. I understand that it's very difficult, and this slide helps explain it as well. But here are a couple of things you can say. First of all, you could say that on your contract, paragraph 10I, the seller shall inform the buyer in writing if the seller is a foreign person. So you can have a copy of the contract with you, and you can say, I need to ask you if you're a U.S. citizen, because the contract says that you have to inform the buyer in writing if you are a foreign person. And if you are, then we're going to put a FIRPTA affidavit on the contract. If you're not, then we don't have to, but at least we've taken care of this so that we have met the requirements of the contract. So that will help you. And it is a very uncomfortable time to be asking those questions. So you can say, as I said, bring the contract with you and point out to them that they have to inform the buyer in writing. So you need to ask that question so that you can put it in the MLS. So if you put it in the MLS, then everybody knows that it's a FIRPTA transaction, right? You could put in their FIRPTA transaction. It's not a surprise to the seller and it's not a surprise to the buyer, because the title agent is going to ask, are you a US citizen? They're going to ask for a social security number if they have to get a payoff, and they have to fill out paperwork. They're going to have to fill out a non-foreign affidavit stating that the person is not a foreign person and that they are that they have their social security number on that form. So again, it's better to give the seller a heads up at the listing appointment so that this way they can go to the accountant and have the paperwork filled out and let them know that, excuse me, the potential of 15% of the sale price must be collected and sent into the IRS. Excuse me for a minute. Let me just take a sip of water. We're going to talk about the FIRPTA affidavit. However, that can present a problem as well to your buyer. So just know that your contract will help you discuss the citizenship issue if they're a US citizen. You don't have to get their social security number, but just let the title agent know that it's the possibility is there that it's going to be a FIRPTA transaction, and let the seller know that they need to seek the advice of a tax professional as soon as possible.
And just let them know that, like, you ask this question, just be like, I ask this question to every single person. Like, if you're the listing agent, you know, say, I ask this question to every single person. Like, I just need to make sure that we're fully covered and making sure that we're moving forward without any bumps in the road. That's all.
Right. And the contract says that that the seller has to notify the buyer in writing. It is a contract. And what if the buyer said, well, you know what? I don't want to deal with the IRS, and nobody told me that this was going to be a foreign seller and that I was going to have to sign the paperwork that goes to the IRS. I don't want to deal with the IRS. I've never had a problem with the IRS and I never want to have one. You know, a lot of people don't want to deal with that. So if it's a surprise at the closing table, or if it's a surprise after they signed the contract, is that a potential for a problem? I don't know. So if we discuss it with the seller at the listing appointment and let the seller know that there's going to have to be an affidavit, there's going to have to be an addendum to the contract, the FIRPTA addendum, then everybody knows. If you put it in the MLS, everybody knows, right? So it's important to do that at the listing appointment. The last paragraph of the contract also addresses FIRPTA, okay? And it explains what FIRPTA is. And it says that if the seller is a foreign person, then the IRS requires the buyer of real property to withhold up to 15% of the amount realized, which is the sale price, and remit that withheld amount to the IRS unless an exemption to the required withholding applies, or the seller has obtained a withholding certificate from the IRS authorizing a reduced amount of withholding or no withholding. It could even be zero, but only the IRS can determine that and approve it. An accountant can figure it out, but the IRS has to approve it. If the seller is not a foreign person, the seller can provide proof of the non-foreign status to the buyer by written delivery of a certificate, which is that non-foreign affidavit that the title agent's office, Lucie's office, would prepare that, saying that the seller is not a foreign person. They'll have the information necessary on that, and that will alleviate the need for any withholding. So again, you can show the seller this paragraph as well, all right? So it can present, these can all present a problem. The best thing is if they have the numbers, it's easy. You just know that if they have their social security number or they have a resident alien card. So if you're asking them if they are a US citizen and they say no, then your next question would be, do you have a resident alien card or do you have a green card? And if they say yes, that's fine. They have a social security number. Let them know that the title agent is going to be required to make a copy of that resident alien card. So it's not just that they can say yes, and they're going to need to ask and obtain their social security number. Some people think that a tax identification number is the same as a social security number. It is not. This is only used for this purpose, the tax identification number. So if the seller is a foreign person and has received that withholding certificate from the IRS that says it's a reduced amount or eliminate that total withholding for this transaction and gets the same, the approval to the buyer or to the closing agent by closing, then the buyer will withhold the reduced amount, if any, and timely remit the funds to the IRS. So the tax professional will prepare an 8288B, which is the withholding certificate, and send it to the IRS prior to closing. So an accountant takes care of that and sends that to the IRS. If the seller brings a withholding certificate to the closing that has been approved by the IRS, indicating a reduced amount of withholding or no withholding, then the buyer can rely on that and follow the instructions on the IRS approved withholding certificate. Sometimes people think that the withholding certificate that has been sent to the IRS is the be all end all, and that's all has to be collected. No, it has to be approved because the IRS may say, no, that's not enough, or no, we're rejecting this for whatever reason. So that's why it's always important to have a tax professional involved, because that tax professional can then deal with the IRS on behalf of the seller. The seller is not going to talk to a title agent. They're not going to talk to the buyer. They're not going to talk to the realtor. They're only going to talk to the seller or to their tax professional. So again, it's good to make sure that if you have a tax professional involved, I know there's a company in Cape Coral. They are called FIRPTA Solutions. They're in Cape Coral, and that's all they do is FIRPTA. They do nothing else. They only do FIRPTA transactions. Even if you find out at the closing table, which it shouldn't get to the closing table, they can handle the paperwork the same day. They have contacts within the, I guess, local IRS offices. I'm not sure. But I know they've solved a lot of problems where people didn't know that it was actually a FIRPTA transaction until the closing day. So it shouldn't get that far. It should start at the listing appointment and just keep asking the seller, did you go, did you go, did you go? It's very, very important. So if this withholding certificate is filled out, has gone to the IRS, the seller has it back approved, then the reduced amount or the elimination of the withholding can be followed. And the buyer will be given a copy of all this because, again, a lien may be placed on their property. So they need proof that the paperwork was sent in. If that withholding certificate comes back approved and says that the seller does not owe $70,000, they only owe $3,000. Well, if it's approved by the IRS, then the buyer can say, okay, authorizes the title agent to just send in the amount that is approved, let's say $3,000, and return the balance to the seller. So that's if they have that withholding certificate and it's been sent in and approved. As I said before, this withholding certificate, the seller uses that form to apply for the reduced amount of withholding. The tax professional will prepare the document and send it to the IRS to reduce the FIRPTA withholding tax or eliminate it. The form is used to establish the actual tax that should be collected based on the gross proceeds and any other taxes due. It's also based on any type of agreements we may have with the country involved, the country where the seller is a citizen of. So there are different agreements that the countries have, and it's very confusing. because I did one time talk to the IRS about it, and they told me it's based on the Hague Convention, and let's look at this document, and it was 700 pages long, and I said, no, I don't want to see that. I just want to know what you do. And they said they base it on a lot of different things. So again, tax professionals know how to do this. So the form is going to establish the amount to be collected, and again, approved. The approved form has to be presented at the closing or prior to closing, which is best. If the buyer wants to escrow the funds, the entire amount of the withholding. So if the certificate, the withholding certificate, has not been approved from the IRS and it says that the seller only owes $3,000, yet based on the sale price, $50,000 was collected, the entire amount still has to be withheld until that approved withholding certificate is presented to the title agent. So again, that whole amount has to be collected, okay? And then it would be dispersed when that approved withholding certificate was received. Or here's another option. If prior to closing, and again, this is in paragraph V, the last paragraph of the contract. If prior to closing, the seller has submitted that application for the reduced amount, they've submitted that withholding certificate, but no withholding certificate has been received as of the closing, the buyer shall at closing withhold the applicable percentage of the amount realized, the sale price, by the seller, and at buyer's option, they can do one of two things. They can timely remit the withheld funds to the IRS, or they can place the funds in escrow at the seller's expense with an escrow agent selected by the buyer and pursuant to terms negotiated by the parties. So what does this mean? The buyer can say when the money is remitted if a withholding certificate has been sent, okay? So they can say, you know what, Mr. Seller, I appreciate the fact that you went through that and you sent the form in, but we didn't get it back yet. And based on the contract, I want the funds to go to the IRS today or tomorrow. I don't want it placed in escrow, because what if they reject that? What if there's an issue? What if you actually owe more money and not enough is collected? Am I going to get it from you? So the buyer can say, I want it sent in now, or they can say, okay, I'm going to be a nice guy. I'll put the funds in escrow, okay? But I don't want Lucie to hold it. I want Kathy to hold the funds. And the seller's going to say, well, I don't know, Kathy. I've been working with Lucie's office for let's say a month now, and I trust them. I know who they are. I don't know who Kathy is, and Lucie's not charging me any money. Kathy's office is charging me $500 to hold the escrow, and I have to pay it. So that can present a problem as well. Usually that doesn't happen. Usually the title agent does hold the money. So it can present a problem there. The IRS usually responds within 90 days when they get a withholding certificate. So if there's an escrow agreement, it's going to have an end date on it. If the title agent does not get the withholding certificate or get any indication of approval of the withholding certificate, they're going to send the money in. This can present a problem as well, because suppose the seller gets the withholding certificate and doesn't send it to the title agent. Well, once that withholding certificate is issued, there are a certain number of days, and I believe it's 20, that the funds have to be sent to the IRS, because at that point in time, everyone should know how much has to go to the IRS. So if the seller neglects to tell the title agent, then there are penalties and interest. So the title agent will then send the entire amount in, and those penalties and interest are going to be collected on there so that the payoff amount to the IRS will be more, and the seller's not going to understand why. So there are pros and cons to either. If the buyer understands that they have the option to send it in, that protects the buyer, okay? And the seller should understand that if the buyer wants to do that, they can, as per the contract. And if the buyer does not want to put the money in escrow, They don't have to, as per the contract. If the seller did seek the advice of an accountant early in the process, they would have probably had the form back by the closing, unless it was a really quick closing. So these are some things that you can discuss with both seller and buyer, just so that they're informed of it. And it just helps make the transaction smoother. Again, the public doesn't understand this. I wouldn't know it. I'll say it again, if it wasn't my job. And you want it to be a seamless transaction, right? You don't want to have a problem. When I was doing closings, we had a closing where $70,000, I keep saying $70,000 because the seller hit the ceiling. The seller didn't know that the money was going to be collected at closing until the day of closing, when he reviewed his settlement statement. That's when we were still using HUDs. And he hit the ceiling. What do you mean? I didn't know any of this, blah, blah, blah. So again, it can make for an uncomfortable situation. Was it my office, the title agent's office? Was it their issue as well? They should have notified the seller before. Yes, they should have. They should have, right? So again, everyone has to do their part. So it's very important to let the seller know. And the buyer as well. That's why if you put it in the MLS, the buyer will know and they'll understand what the ramification is to them if they hold the money in escrow, if there's a problem with the escrow, if the funds don't get to the IRS in time, if the funds don't get to the IRS, period. Because sometimes the title agent has neglected to ask if the seller is a foreign person, and they send all the proceeds to the seller, and then the buyer calls up several months later and says, hey, there's a lien on my house. What's up with this? So again, it can present a problem. So we talked about the buyer's affidavit a little bit, and this also is something that some people suggest to their buyer. Again, that's certainly up to you. I just wanted to go over it because people ask. What the affidavit is, it's the buyer's intent when they sit at the closing table. What is their intent when they're purchasing the property? So if there is a change of circumstance, the buyer has to be able to prove that they didn't contemplate that when they purchased the property, okay? So it's the buyer's intent at the time of closing. Should a claim arise regarding the residency requirement that affidavit states, the buyer would have to show that a change in circumstances not contemplated at the time of closing prevented the buyer from complying with that affidavit. Again, does it happen often? I don't know. That's why it's best to get a tax professional involved as soon as possible to protect everybody. Buyer, seller, realtors, title agent, and underwriter, okay? Even though it's not a title claim, it's something that we deal with through the agent, and the agent, even though again, it's buyer responsibility, it's really a tough situation. The requirement to sign that affidavit is for residential transactions only. The buyer must be an individual. Vacant land is excluded even if the buyer intends to build a residence on the property. The seller is still responsible for filing a tax return and paying the full amount of any tax due. So the seller still has to file a tax return. The buyer's refusal to sign the affidavit, no matter what the sale price, results in 15% of the sale price collected and sent to the IRS. So the first paragraph of the affidavit says that the buyer is purchasing real property from the seller for a purchase price of not more than $300,000. The above described property is being acquired for use as the affiant's residence or for use by affiant's family members at least 50% of the number of days the property is in use during each of the first two 12-month periods following the date of purchase. So it's not a calendar year, right? It would be from, today is what, March 12th? March 12th, 2021 to March 12th, 2022. That's your first 12-month period. then March 2022 to March 2023. So because the buyer would sign this affidavit, then the title agent is not going to collect on the buyer's behalf any amount for FIRPTA. The buyer's refusal to sign this triggers 15% of the sales price being collected and sent into the IRS. So we're going to have some questions, but let me go through this first. If the sale price is greater than 300,000 to $1 million, now this is different because the affiant is acquiring that property for the purchase of more than 300,000, but not more than $1 million. The above described property is being acquired for use as the affiant's residence. So if I'm buying that property and I'm going to sign this affidavit, it has to be my residence. It doesn't say it has to be my primary residence. It just says residence. So it could be a second home, right? Therefore, the undersigned herein directs that the agent withhold only 10% of the purchase price from the seller. 10% of the purchase price from the seller's proceeds based on the certification. So again, if the buyer signs it, 10% of the purchase price is sent into the IRS. If the buyer refuses, then 15% is collected and sent to the IRS. Exemptions from withholding: the seller signs the non-foreign affidavit, right, that the title agent prepares. We talked about that. The purchase price and intended use of the property qualifies the transaction as exempt, and the buyer signs the affidavit of 300,000 or less. The foreign seller provides written proof from a tax professional that no withholding is required, or the foreign seller presents the withholding certificate approved by the IRS by the closing date indicating that no withholding is required. We have a couple of questions, answers at the end that you may have about this affidavit. So let's just talk about the forms real quick and then we'll get to the questions. Do you have any other questions right now, Lucie?
Well, it says, and tell me if you want to answer this now or later, but it says, if a buyer purchases vacant land from a foreign seller and intends to build on the property and has the intent to move in immediately upon completion of the construction, are they eligible to sign a FIRPTA waiver?
Requirements. Vacant land is excluded even if the buyer intends to build a residence on the property. So it's excluded. So you would not have to collect on vacant land, even though they're going to build on the property.
Did that answer your question, Michael?
No, that's so what you're saying is that they're excluded from the FIRPTA waiver if they intend, the buyer can sign it if they're buying from a foreign seller and 6 months is the construction time and they'll be living in it the following year and a few months in that first year. Would that be enough for them to be able to sign that waiver?
Or are we saying that vacant land is excluded totally and you have to have the withholdings period?
No, vacant land is excluded, so you would not have to withhold on it. It has to be a residence. Okay, it already has to be, right? So if you're, now that would be a question, that could be a question for the accountant, or it could be a question for FIRPTA Solutions in Cape Coral. They're in Cape Coral. You can call them and ask them. But vacant land is excluded, so he can't live on it. They can't live in the property, so they can't sign the affidavit that the member is going to reside there because there's nothing to reside in yet, right?
Thank you. Thank you.
Yeah. So that's excluded. Okay, so the 8288, right? This is the different form. This is the form that's filled out that's sent to the IRS along with the check, right? So it has to be completed and sent to the IRS along with the withholding check and any other necessary documentation within 20 days of the closing. The buyer is the withholding agent, and all of the information on the form must be that of the buyer and seller, not the title agent. before 9/11, we really didn't, as you know, I worked with a title agency. And it was asked, but not really anything happened too much with it. This was in the 1990s, right? It was sent in and it wasn't sent in. The 8288 form was filled out and the withholding agent was the title agency's name and all of their information. And I signed those. I was an employee of them. I signed those. Technically, if there was a problem, the agency and I could have been a party to that transaction, a party to that problem, because we signed that document as the withholding agent. And I signed that document as the preparer of that, right? Which is not right. It's actually the buyer who has to be responsible for that. So since the buyer is the withholding agent, all of that information on there has to be of the buyers, and the buyer has to sign it. And it's sent to the IRS on behalf of the title agent. And both the buyer and the seller must have a tax ID number. So if the buyer doesn't have a tax ID number because they're a foreign person, then they would need to get a tax ID number as well. That's why all of this is done in the beginning, right? So you can ask the buyer as well, if you're working with the buyer, if they're a US citizen, if they're purchasing from a foreign seller. If they're purchasing from a US citizen, it doesn't matter because there no taxes have to be collected because they're going to file their tax return and they're going to file the 1099-S for the return for the sale of the property. And it has to have the legal description of the property. Tax professionals should prepare the form, and the buyer's information and signature are required on that form. I know a lot of title agents do it, but again, if the seller is working with a tax professional, they will usually fill out the forms for both parties. That way the title agent isn't responsible. And after the closing, this is what's most important as well. After the closing, if there is a problem, they'll go to the tax professional because the title agent can't answer any of their questions. They can't answer the seller's questions. They can't answer the buyer's questions because they're not accountants. If they were accountants, that would be different, but they're not. So again, they can't answer those questions. The seller will call and say, where's my money? Where's my money? Where's my refund? I don't know. And they're not going to talk to me. And problems happen. I had an agent in Fort Myers. They withheld, and I remember it distinctly, they withheld $37,000 from the seller for a foreign sale. So what happened was the IRS sent the papers back approved. The seller owed $3,000. He was going to get back $34,000. They made the checks out correctly, $34,000 to the seller, $3,000 to the IRS. When they sent it out, the checks were put in the wrong envelopes. So the IRS got the check for $37,000 and the seller got the check for $3,000. So when the seller called the agent then contacted the IRS and explained the situation. And they said, well, we don't know where the money is. She said, well, what do you mean you don't know where the money is? Well, she said, I have a check here, stamped for deposit only, IRS. What do you mean? I need a $37,000, refund, right? Sorry, we can't do anything about it. You have to wait. Months went by, right? Because first of all, this was before the seller was required to have a tax identification number. There's no way they can attach that money to a seller or to a buyer or to a transaction unless the seller has a tax ID number. She said, well, you have the address there and there were no tax ID numbers on the form that went in. So they couldn't find the money. He wanted her to take a second mortgage on her home, to send him his $30,000 or whatever, $34,000, et cetera. It took about 6 or 8 months for her to resolve the issue. All right. It should not have happened. That was before, like I said, that was before a lot of other issues happened with the 9/11, et cetera. So Now, foreign seller, foreign buyer, they both need a tax identification number. Foreign buyer, resident alien or US citizen, the foreign buyer does not need a tax ID number. They will need one when they sell the property, but not when they purchase it from a US citizen or a resident alien. Again, that's why it's so important to ask either the buyer or the seller that difficult question. Are you a US citizen? Are you a resident alien? If they are neither, if they're a foreign national, then they need to seek the advice of a tax professional, unless the buyer is purchasing from a US citizen. So that's why it gets confusing, but it's good to understand the situation. Okay. A husband and wife hold a joint title to US real property. The husband is a foreign person, the wife is a US citizen. They are selling US real property for $500,000. How is the amount of withholding determined? The withholding is 15% of the amount realized allocated to the foreign seller. In the absence of evidence to the contrary, the husband and wife are each deemed to own 50% of the property for the purposes of withholding. So it's $500,000 divided by 2. That would be 15% on 250,000 or 37,500. This is where that substantial presence test could come into effect. If the husband is in the country at least 180 days over the last 3 years, 30 of those days have to be within, let's say we're using dates now, within 2021. If they meet that substantial presence test, then no withholding would have to be sent in. But only a tax professional can figure that out. Lucie can't figure it out. You can't figure it out. The seller's cousin can't figure it out. You can't get a letter from a friend. It has to be a tax professional because there's a certain formula that it's a certain number of days in the year 1, a certain number of days in year 2. It's very, very confusing. So a tax professional can figure that out. But if there's nothing to the contrary, then taxes have, the 15% has to be collected on that $250,000. Who's responsible for the remittance? We already spoke about this. Generally, the buyer is responsible for seeing that the money is sent to the withholding, for withholding to the IRS. The closing agent does it on behalf of the buyer to make sure that it's sent in so that it's not everybody's worst nightmare. All right. Is there an exemption from the withholding for a foreign person if it's a short sale? Again, the seller should talk to an accountant because there may or may not be. But the short sale lender, I hope we don't have any short sales, but the short sale lender needs to know that the potential for X amount of dollars is going to be sent to FIRPTA. I had someone say, well, they don't have any money, so how can they, it's a short sale, so you don't have to collect. Again, that's for an accountant to determine, not for the title agent, because that can present a problem afterwards for the buyer. So if there's going to be a short sale, they should seek the advice of a tax professional. A foreign investor or a foreign seller lists an investment property and would like to participate in a 1031 exchange. Is the sale subject to FIRPTA? If it's for the same amount, if they're selling a property for $400,000 and they're purchasing a property for $400,000, or a couple of properties that total $400,000 or more, then no. But if they purchase a home for $300,000, they may be responsible for tax withholding on that $100,000 that they are getting back. So again, it may be. Tips: verify the seller's citizenship status, whether they're US citizen, born or naturalized, or a resident alien, meaning they have a green card. Include FIRPTA transactions in your MLS so that everyone will know. Suggest the seller seek a tax professional at the listing appointment. Foreign seller must have a tax identification number. A foreign buyer purchasing from a foreign seller must have a tax identification number. Discuss the paragraphs that I showed you in the presentation relating to the FIRPTA contract so that it makes it a little bit easier to ask regarding the fact if they're a US citizen or not. Include the FIRPTA addendum to the contract. Discuss the issues with your client, the forms that have to be filled out, and the amount of money to be withheld. If applicable, if the buyer wants to sign that affidavit, have them sign the affidavit prior to closing. Closing table is not the time to discuss FIRPTA issues. It's too late for the seller to file that withholding certificate or for them to possibly get the tax ID number if they need a new one or if they don't have one. So again, these are all things that are so important to help make that closing seamless. And they'll really be, happy that they're dealing with a professional, because a lot of times people don't tell them and then they're surprised when the title agent does, and they'll say, well, why didn't my realtor tell me? And, the title agent's going to say, well, I don't know. They're not going to say that. They're going to say, well, I'm not sure, or something like that. So it's always good that you ask them ahead of, at your listing appointment. Are there any other questions?
I don't see any in the chat, but does anybody have any questions and want to unmute themselves and ask? I know it's quite a bit of information.
Yeah. The best thing is to just send them to a tax professional. That way, there are certain things that a tax professional can do. Maybe there's a visa. I don't know. I'm not a tax professional. Maybe there's some other type of rule or IRS rule or code or whatever that says you don't have to collect it because of this, this, and this. Only the tax professional would know that. And again, the seller's going to have to wait to get their money back. So that's another thing. They don't want to have the money here.
Absolutely. Well, that was quite a bit of information. Thank you so much, Kathy, for sharing that with everyone. And thank you everyone who attended today. We hope that it was helpful for you. If you have any questions, you're still able to ask them in the chat, or you can unmute yourself and ask them verbally if you'd like. As well as we're going to do a giveaway for those of you who have participated today and been here. We do appreciate it here from Aero Title Services. Since we hosted this class, we're going to do a little giveaway for anyone who participated. So if you guys could put in the chat between the numbers 1 through 100. I have a number in my head. If you have access to your, cool. Awesome. Thanks, Phil. Glad you enjoyed it. Got a couple of people putting in some numbers for the giveaway. Thank you, Renee. Very welcome. Thank you. Thanks for letting us have it. And I'll wait just another 5 seconds for those of you who, if you want to put in a number. So just 5 more seconds. All right. Okay. So the number was actually 62. So that means Michael Ahern is the winner. So congratulations, Michael.
Thank you.
Yes, thank you for being a part of this. And I hope that you guys all enjoyed it. I will be sending out an email shortly with some additional information and a recap with the information that Kathy will send over to me, as well as a replay. So you guys can also, there's a bunch of extra information on our Aero Title Services YouTube channel that you guys can go and check out. But thank you so much for taking the time today. Thank you, Kathy, for being here with us today. And
My pleasure.
Yes, very, very, always love having classes with you, and people always love the information that you give. So
Thank you.
Stay tuned, guys, because we have a bunch of other classes with MCRTC, and we hope that you will find those valuable as well. And we will talk with you guys soon. So thank you so much for being here, and have a great rest of your Friday and weekend. Go real estate. Yay.
Thank you.